I'm a professional options trader, been doing this for 16 years, and these are 5 common options trading mistakes that you don't want to make. So let's get us started off on the right foot. My name is Eric. I run the ES Invest YouTube channel, and I am not affiliated with Barchart in any sense. They are my friends. I enjoy making content with them. I'm also not any sort of financial advisor. I am just a dude online, so you should not take any options. So I want to walk through 5 common trading mistakes, what they are, and most importantly, how you can instead approach the problem set so that you do not need to make the same mistakes everybody else does. Looking for the best X. Why is this such a big mistake? Because this sends us down the entirely wrong trajectory right out of the gate. So what do I mean by this? Well, surely you've seen people search for things like what are the best leaps to buy in this year, or what best stocks to do options and the best strategy. Then you have the good old best way to grow a small account into a still small account, but slightly less small account. So what's the fix here? Think about it this way. The reason why trading works is because people have individual expressions of what they're looking to accomplish. If everybody was looking to accomplish the same thing, there would be nobody taking the other side of trades. So because of this, when we think about what is the best whatever, it is highly relative to you, the individual. So what I think about in this scenario is to define for yourself what is best relative to what you're looking for. So what does that mean? Well, if you're trying to achieve really high returns, what does that mean? Probably you're going to have high risk, high variance in your returns. And if you're somebody that's okay with that, then that's a suitable objective. Now we have something more specific we can learn about. If you're somebody that's really risk averse, that would probably lead you to a heart attack and not be successfully deployed. So what's best for that one person is not best for that other person. That's the entire nature of options, is that they are strategic investments that can be carefully adjusted to meet individual circumstances. So there is no best anything. You have to define that for yourself. The second thing is traders notoriously overcomplicate their structures. And what does this mean? One of my favorite sayings here is from Leonardo da Vinci, who is quoted saying, "Simplicity is the ultimate form of sophistication." I really like that. And I find my trading has drastically fallen suit over the course of 16 years doing this. Now, let's take a look at an example. On the left-hand side, this is looking at a specific strategy. I'm not going to go into all the details, but just say this is a $100,000 account that grows to a $160,000 account. This is using 0 DTE short strangles in the SPX from 2020 to 2024. If we look at the same exact time frame, same exact account, this is using short iron condors. Notice the difference in the return profiles here. Now, to be clear, there's more to this story than just this, and I'm not ever going to say that there's no room for more legs in a strategy, but I can say unequivocally, in general, the more you convolute trades, the worse they perform, and it's because of friction. There's a lot of it. Not only is it the commission you pay per leg, which is a small part of the overall friction, there's actually a lot of back-end friction, meaning where you actually get your order routed, where it's quoted at, where it's filled. All of that still comes out as a cost and is amplified when there's more pieces to a trade. So when I think about creating strategies, I think about what is it that I'm trying to express? What is the simplest method that I can express this idea? That's where I start. Next up, we have not understanding volatility. Whether or not you trade volatility outright as an options trader, which is actually one of the premier reasons to trade options, is because it's one of the few asset classes that you can isolate volatility. But let's just say you're trading them for leverage or something else. Whether or not you want it to be there, volatility is part of every single trade, no matter what. So if you're buying an option, you care about volatility. If you're selling an option, you still care about volatility, even if you're doing it directionally. Because how many times have you seen somebody say, oh, I sold a put and the underlying went up, meaning it moved in our favor, yet they're losing money and they can't understand why? Well, it's because of volatility. It's because of this other piece of the equation that we're leaving out. So there's a lot of misnomers when it comes to trading options and with respect to volatility. People will say things like, if volatility is really high, you don't want to buy. And if volatility is really low, you don't want to sell it there. And there's gray areas in all of trading. Actually, some of the best periods to sell volatility for the sake of capturing variance risk premiums is when it's low. But you will hear people say things like this all the time because they are decent general rules to follow. If you're buying something, you don't want to buy it when it's high. But also, let's say you're buying an option. And if you buy an option that's really deep in the money, you're not actually buying that much volatility. It's mostly intrinsic value. So there are ways you can minimize all of these different effects if you understand how options work. It's okay to follow general rules, but it's important to know that no matter what, every single time you're trading an option, whether you want it to be or not, volatility is part of the equation. You have to understand how it behaves. The next thing is what I think most traders probably struggle with the absolute most, which is misunderstanding the challenge of trading and then developing a false confidence interval. Typically, I attribute it to the Dunning-Kruger effect, which we'll talk about. So when we think about the challenge of trading, we all know, this is from my website, we all know that's difficult, right? I'm not going to belabor the point, but the issue is a lot of people start trading options expecting to perform at a near professional level, right? In order to be successful. It's a small group of people that do that. You would better be a strong performing professional to hit that. They expect to just walk into that. And it's because they're misled because the barrier to enter trading is so low. You just open a brokerage account. That's misleading to a lot of people. And then this idea about false confidence and remaining vigilant, I think this is difficult because our ego's involved here. This is from a Harvard Business Review article. And the Dunning-Kruger effect is a well-known thing where you'll notice this big peak, right? So this y-axis is our confidence. This is high, this is low. And then this is our understanding, your wisdom, your competence. You'll see it put as a lot of different things. But here's what happens. You start to learn about whatever you're learning about. And you get to a point where it feels like you're learning a lot, like pretty quickly. This is the point where you are too ignorant to realize that you don't know a lot. You actually don't know a lot, but you're very confident because you just spent 3 years learning something. You think you're pretty competent, but then you make a mistake inevitably that brings you to this low point where you're like, crap, I'm now not confident at all because it's clear that I don't know what I'm doing. And you are now on the successful curve to overcoming the Dunning-Kruger effect if you continue to learn. So the point here first is understand options are intricate products. You're not going to learn them in a year. You're not going to learn them in 3 years. You're still not going to know them cold in 5 years. You will have a strong competence level at that point, but we are all still learning. I am still learning continually, and it's because it is such a complicated space. We have to acknowledge our own fallibility and embrace it. The people that fail to do that tend to struggle in this space. The last thing I want to talk about here is the problem where a lot of traders are focused on all of the wrong pieces when we first start trading out. I know when I first started trading, I was worried about how strong my win rate was or how much money I was going to make in a strategy. Those are the wrong things to consider. I use a working out analogy because it speaks to me. When I first started working out back in 2004, I was focused on doing things I could see. I wanted big biceps. I wanted to have abs. I could see them. But when I was walking around the gym, I would notice the older dudes that had impressive physiques. A lot of them had actually like really thick cores. They also had really thick spinal erectors, the muscle that support your spine in the back. They had big forearms, stuff that I didn't care less about. What I realized is that the people that had been lifting for a long time learned to focus on the pieces that provide solid foundation to then maintain longevity. Same exact thing in trading. The way to consider this is every single trade that you place is an individual trade that has to be treated as such, but they're all parts of a system. You have to have a way to keep those two views in mind. I can't let any one trade get away from me. That can cause too big of a drawdown on the account, but I can't overemphasize any one trade, because if it's the best trade on planet Earth, how repeatable is that over the next 20 to 50 years of trading? They're all part of a system. You have to take a systematic approach to trading. That means doing the hard things, like creating a trading plan, like creating a trading log that you track what you're doing and validate your results. Options are one of the coolest products that you can trade, in my opinion. There's no shortage of ways that you can use them to fit your needs, but we have to approach them in a healthy manner. Don't make these 5 mistakes. Don't forget to like, subscribe, share, and what did we miss? Throw it in the comments below. Be an outlier. I'll see you guys later.